Kunal, hi, good to have you with us. How have you been?
Hey Ashu, good here. Good to connect with you. Things have been good. Nothing much to complain.
Kunal, it's a pleasure to have you, with us at Asia Tech Journal. This is a session which has been in the making. I've personally been very excited about this session, and that's largely because MoneyTap, which was the earlier avatar of Freo, was one of the first batch companies, right, or season one companies of the fintech wave that we saw in India. And it's been an interesting sort of such conversations become very interesting, right? And that's largely because you've seen India transition at many levels, right? Credit used to be a very patchy business. It used to be a big boys game. And from that into the fintech wave coming in, and even the fintechs for that matter, they've seen the evolution. I think in a variety of ways, right? From data inconsistency, to higher FLDGs, right? Recovery being a huge problem, regulations, and so much more. From that to where we are today, right? Just so much more efficient in many ways, right? Your role has become, from MoneyTap now into Freo, you've become a neobank. The aspiration is different, much larger. Wanting to engage the customer at many, many more levels, right? Beyond credit, right? Like I said, right, good to have you with us, Kunal. And
Absolutely.
I'd love to start this conversation with a quick introduction, Kunal. Of your background and a little about MoneyTap, and from that to now Freo. I think that'll be a great start to the conversation.
Sure. No, thanks for having me here. Ashu, always a pleasure to connect with Asia Tech Journal. So quick background, I think without making myself sound too old, been around the block, essentially went to IIT, did my BTech in computer science. That was about more than 2 decades ago. And then worked in the industry, early days, first 7 years, worked with Texas Instruments, worked on global, complex product design and architecture and stuff like that. And then after that, turned entrepreneur. I went to B school in between, to Indian School of Business, Hyderabad. That was a 1-year program. I think the whole idea was to figure out what I wanted to do with my life. Post my job, before becoming an entrepreneur. I think in hindsight, it sounds like a very expensive way of figuring out what to do with your life, because MBA is not cheap anyway. But I know you're always wiser in hindsight. I became an entrepreneur while I was on campus at ISB. And then it's been a journey. It's been an exciting journey, more than 12 years. I have seen a full cycle of starting businesses from scratch, bootstrapping my way, turning a company profitable. The last company that I had done, along with Anuj, my co-founder here, he and I were, co-conspirators in that company as well. And we turned the company profitable. We had sold it. And here we are, building Freo. You're right about, MoneyTap being the earlier brand through which our products were known. And we decided to infuse some more youth. When you call us like one of the first batches of fintechs, it makes me sound a little older. So we decided to infuse some youth. But yeah, the Freo is the brand and the avatar. And personally, for me, it's an exciting journey. Getting up every morning, looking forward to a Monday morning. I think it has just been natural. So I'm super excited with what we are. Hopefully, we do something really good for our customers.
Phenomenal. Kunal, I possibly would have wanted this question to come in a little later, right? But I think you really cannot, have it answered now, right? Why this transition, right? One way to look at it is that, as when you are in that game of providing loans, right? It's a fixed relationship, right? It's a very transactional relationship. While we continue to talk about customer satisfaction at many levels, right? And I think fintechs have largely essentially been built around experience. They've brought in that excitement which is required. They've brought in the agility which is required, right?
Yes.
I understand this. It's a natural corollary, right? For any player which was into a lending game, right, to eventually be graduating into being a neobank, right, and extending a bouquet of services, right, extending similar experiences. That's the natural sort of an answer, right? That's a natural sort of a basis and thesis, right? What's beyond that, right? What triggered this entire sort of thought process, right? Where does banking fail? Where it becomes relevant for a neobank, right? It could be cliched at many levels, but I think it's an important piece to understand, right? A lot of people on the outside continue to question the existence of neobank, right? It just becomes important in this conversation to understand why now.
Sure, absolutely. I think this question is super relevant, Ashu. And I think at any point in time, if you ask this question, I think if you dial back a little bit and think about only customers, like forget that, there is a world of fintechs, or if you forget that there's a world of new age companies coming and solving problems. If you look at it from a fundamentally a customer standpoint, it's very obvious that there's been a huge amount of disruption in the way customers have consumed services online and offline in the past 10 years in our country. Internet penetration, access to information, India Stack, Aadhaar, UPI. So if you look at the way we are changing as an economy, as a society, there's been a very natural evolution to going more and more digital, becoming more focused on a customer experience, killing transaction costs, making things more intuitive. So for us, when we started out our journey, we knew that eventually we would become a company which would be delivering products in the world of financial services, but we would be doing it much better, faster, cheaper, much more affordable for customers. But you have to start somewhere, and then you have to build on top of it.
Interesting.
So our first leg of the journey was to solve the biggest problem that middle class India faces, which is access to structured credit or money whenever they need it in life. It could be 20,000 rupees, it could be 10,000, it could be 5 lakhs. So that focus led us to create MoneyTap, which was India's first line of credit product. But when we were building it, we knew that we would be becoming much bigger. We'd be doing things which would go beyond what the credit business could solve. But back then, the tag of neo-banking did not exist. This is a freshly coined term, so to speak, in the industry, the global industry. And if you look at what's happened in North America, Latin America, if you look at Europe, if you look at Africa, if you look at South Korea, you will see that new age companies which have used technology for generating operational leverage, these companies have come in and have become better and better at solving problems. And I think India was not to be left behind, because the young demography of India and the strong digital penetration was pushing us in that direction. So we knew that we would go beyond credit, and the evolution has been natural to solve credit problems and then to go and pick other problems which are lateral to credit, but which allow us to become a key part of our customers' financial lives in solving multiple problems. And when we made that transition, we actually had to give it a slightly more fresh avatar or a brand name, which would go beyond the credit brand name. So when we launched Freo, we knew that we were building something which could become a digital bank of the future. And I'm sure, we all see how the regulator is pushing for digital banking. But honestly, we had no idea that there would be a term called neobanks one day that would get attached to what we are doing. But fortunately, it is in that way. So as a consumer business and financial services, looks like we are a neobank, but hey, we're solving problems and giving people solutions for accessing financial products in a faster, better, cheaper manner. But that's what it is really.
Interesting. Now, Kunal, I started my career as a banker, right? When you talk of neobanking, you're essentially talking about a lot of savings products. You're talking about assets and liabilities combined, right? You're not really sort of looking at just one such product, right? You're talking about a holistic banking solution. Far more agile banking solution, right? Typically, which say a traditional banking system was not necessarily, because of the way they were designed, right? They never had the ability to go on and deliver those services at that speed, at that pace, and that customer delight, right? Here, a lot of customization, for example, happens, right? A lot of creativity comes into the game, right? So you, in a way, bringing that life to banking, right? You're making it more exciting in many ways, right? But the core fundamental question continues to remain, right? I still remember my days in banking, right? The most difficult thing to do is make people switch out of their existing banking ecosystem into a newer banking ecosystem, right? While I understand the consumer is transition, it's become so much more savvy, it's become so much more intelligent, that possibly creates or carves out a certain segment, right, which could be immediately available for you. This is still very, very core basic banking, right? What's your sense of it, right? What are the other differentiators in the process? A lot of other banks, right, they've also realized that, they are slipping in the game. They are also becoming far more agile in the process, right? They have now a lot of entrepreneurs, right, who are leading specific initiatives. I've particularly been impressed by, for example, say how Bank of Baroda has been doing, right? So somebody who's in the leadership capacity, Bank of Baroda, he's been extremely agile, right, with what is happening. What's your sense of it? Where are those differentiators? Or are they largely cosmetic, more creative in nature? and lesser on absolute differentiating mechanics, right? Because this is again a very, very regulated space, right? You cannot do a bunch of other things. For example, you cannot have very savvier communications, right? There have been products in the past where RBI has gone out and said that you cannot market it in this format, right?
Yeah. Yes,
right?
that's right.
So, what's your sense of that?
Sure. I think, Ashu, you've hit the nail on the head through this question. Honestly, if you peel the layers of the onion, as far as any fintech product is concerned, whether it's a neobank or otherwise, you will realize that at the core of it, there has to be a financial services layer. And that layer is fundamental to the existence of a fintech. So you're really not creating just a very cosmetic, cute interface for customers to do something, whereas at the underlying, you kind of ignore the fundamentals of a real product. So every company today that exists, whether it's a bank or an NBFC or a new age fintech, realizes that. I think the breed of entrepreneurs, the breed of management available in banks and NBFCs totally realizes that, at the fundamental level, it is the core financial service. So you have to build keeping that in mind. I think the one big differentiator in the new age companies versus the traditional companies is the fundamental thinking which has created product stacks, technology stacks, and the whole experience pricing process. And that fundamental thinking is inside out versus outside in. And inside out thinking is traditionally what a lot of banks have been sticking to, which is to say that they have a bunch of products and services and processes which have come about because of their branch-led model, traditional, legacy operating architecture, legacy technology stacks, and they have that product, and then they go and find customers that they can offer that product. And in the process, they try to improve and learn along the way, and they try to add layers of better experience. They try to shave away inefficiencies. But inherently, it is an inside-out thinking. Say, hey, inside a bank, what do I really have? And then let me take this and go to the outside world. The new age companies fundamentally think exactly the opposite, which is outside in. To create a long-lasting, sustaining organization, you really need to think outside in, which is to say you have to put the customer first, which is sitting outside your company. And then you say, hey, what does the customer really need today? And if you can conceive that the customer needs something which is fundamentally broken or which is fundamentally not available as per the standards, then you go ahead and create that product. And then you put the pieces in place, whether it is regulation, whether it is compliance, legal, financial, due diligence, and so on. And then you stitch the whole product together. But fundamentally, the product has been conceived, created, launched with an outside-in thinking, saying, what does the customer really need? And then how can I put all the pieces together to comply with regulations, to comply with processes, to comply with financial fair practices, to make sure that the product is really coming alive. Now, if you don't do this, which is outside-in thinking, eventually somebody else will come and do it and eat you up. The reason why traditional companies are slightly moving towards that and beginning to think like that and becoming agile, like you rightly mentioned, is because they're realizing this. So I think that's the fundamental differentiator.
Interesting. Now, Kunal, there is another thing, right? So everybody in the lending space, whoever cut it whichever way, right? Lending was the easier go-to product because that's there's an inherent demand for it, right? And anybody who's looking for money is looking for money, right? And they go to every single door which will offer that, right? And that is essentially what the first wave of fintechs went on to offer, right? And that's how they acquired the customer, right? A lot of this was not necessarily a very deep relationship, right? This was like a fringe relationship, largely because fintechs were ready to sort of take a certain hit on themselves in a certain format way and possibly wanted to offer these loans, right? There was this urgency to sort of create the book, and that was largely because you have stakeholders, there is reporting that needs to happen, so on and so forth, right? Now, my worry is when I see a lot of players, right, including Freo, transitioning from being a player in the lending space, right, to now becoming a holistic player where they're going to offer 5 other things, maybe 10 other things, right, on the asset liability side of the world. My worry is that a lot of this might not necessarily translate into an effective relationship, right? I think that's number one. Number two is there's quite an amount of funding which is coming to the entire lending space, right? Now everybody who's in the lending space, because we've seen 2020, there has been a little bit of a stress. Some people have been able to defend their books smartly. Some people have, possibly, it's not necessarily as hunky-dory. Neo banking has become that another, possibility to sustain in the market, right? Is that a right way to sort of understand this, or am I being too critical in the process, right? But I think given the market that we are, I think it just becomes so much more important. I asked you this largely, Kunal, because you're experiencing all of this firsthand, right? So to have a view from you, I think will really help us understand the construct of priorities better.
Sure. So there are a few things. I think your question has a few parts, and I think all are important elements as far as the company and the customer is concerned. One is that. Look, I think in financial services in India, if you want to build a long-term sustainable business, which ideally should be the primary goal of every single new business, to build a long-term sustainable business, you need to have a few things right. You need to have a very clear monetization engine, wherein that as a business you will make money and you're not dependent on outside capital to just have the game of valuations, and that's okay. That's fun to just put out in the news, but beyond that, that's not how you build a company.
Right.
But a company is built by actually having real value generated for your shareholders, by offering real value to your customers.
Sure.
So I think on the lending side, things have been tough for a lot of companies in and out, but that's the nature of the beast in some ways. Credit is a tough business. You need adults in the room. You need resilience. You need mature thinking, and you cannot take decisions which are comfortable necessarily, but like first order positive but second order negative, which today might be good, but tomorrow they might come back and bite you. So credit is a tough business, but unlike popular opinion, credit is a lot about deep relationship. So a lot of companies have looked at credit purely as a transactional vehicle, when they say that, hey, look, I can actually get a customer a loan or a card, and then I move on. But that model has existed more for marketplaces. So if you look at a lot of businesses which existed 10 years ago, 15 years ago, and today they are nowhere to be spoken about, those are traditionally, I would say, digital marketplaces, which came in and were helping customers solve the problem of search. So if you can get, let's say, a particular card from XYZ Bank or a loan from ABC Bank, these organizations were making search easy, but in the process, they were not able to build a deep, long-lasting relationship with the customer, because you did not have an end-to-end product ownership. You were not thinking about customer value. You were not thinking about retention and repeat transactions, but you had to spend a lot of money to just keep getting the customers come back to your website or your app. So fundamentally, if you look at building a credit business where you are delivering the product and you're not just a marketplace or a price discovery engine, if you're really building a product, then customers will come to you and then they will stay with you. But of course, the natural question is, if a customer comes and borrows from you once, then what happens after that? What is the relationship? And this is where product innovation comes in. So if you're only taking a traditional credit product that exists in the financial services industry, and if you're just slapping on a digital automation layer or a cosmetic layer on top of that, then you're not really changing things around customer engagement, deeper relationship, customers coming back. So you have to think outside in again and create a product where you can stick with the customer through their life, which means that you need to see repeat transactions, very high retention rates, low churn rates. So you need to design for those elements. And I think a lot of companies today are doing that. I see very smart entrepreneurs, smart companies, even a lot of the banks, they have woken up to this realization that you cannot create the same products that were available 10 years ago. So you need to think about retention today. Now, when you do that, you end up getting a deep relationship with customers. For example, in Freo, we have very high engagement rates. Customers who come to us, they don't really leave us unless there's a genuine issue, a bad experience in the process or a transaction, or but you can count those issues on your one hand. So you need to have deeper relationship of engaging the customers.
Interesting.
Beyond that, going from credit to neobank, which is the second leg of your question, right? The reason why a lot of companies are transitioning from, let's say, a business model to a different business model is not necessarily to do with customer retention, but it is a lot to do with how they think they can make their business immune to a lot of market cycles, immune to volatility, and they can build long-lasting, sustainable businesses. So once you create success in one line of business, like what we did, once we established ourselves as India's largest credit line product, then we introduced credit cards, co-branded with our bank partners. Then we introduced other formats of credit products. Then we forayed into neo-banking. But by the time we got into neo-banking, we already have a very sustainable business model where as a company, we are contribution margin positive. We are talking about high growth, but we're also talking about getting to profitability in the near future. These conversations you don't necessarily hear from a lot of startups, and that particularly portrays the picture of worry.
And I think sorry, please go.
No, I'm saying, and I think that's what differentiates the scenario. Like, hey, do I just need to hop business models, pivot from here to there because one thing is not enough, second thing is not enough, or are you building a much deeper vision of you know how to make money, and now you're actually deepening your engagement, becoming a larger part of your customer's wallet. So the thinking is different. But I think symptomatically it might look the same, saying, hey, you're doing this now, you're doing that. But the fundamental layer is, were you successfully able to build your presence in one line of business before you expanded? Or are you just hopping and trying different things? I think that's the question. Yeah.
Super. But I'll talk more Freo, right? This is the 2.0 journey for you, right? From what you did in lending with MoneyTap and now into sort of Freo, right? Now, what's going to be the construct of Freo, right? You answered it in some way, right? What are the things that we see you doing, right? From a customer standpoint, what are the things that you're going to offer? What is it that you knew that you're getting into, right? Are we going to see elements of wealth management? Because, that's something which is becoming very significant. Wealth tech in general is seeing a lot of excitement. Neobanks want to offer that, right? Once you have an understanding of the customer, right? Once you have the understanding of their consumption habits, their spending habits, so on and so forth, right? It just becomes so much more easier for you to sort of guide them, help them, and become a holistic player in their lives. I think that the relationship becomes very, very thick, right? And that dependency which we were talking about, right? I think that just becomes so much more. It becomes a partnership, right? A phenomenal at more than a transactional relationship. So what do we see in the second phase of the journey that you're at?
Absolutely. So I think you mentioned a term like a transactional relationship. We are building a company where we believe that we can become a destination of choice for a typical middle-class consumer in India. People who have not had access to the best products, the best services at affordable rates and convenient experiences. We think we want to become the destination of choice for these customers. So the idea is to start with a particular value or an offering to our customers, which appeals to them at this point in time, and then put them on a financial ladder wherein they can service all their present and future needs through our ecosystem. And in that process, they stay with us. We are able to service them. We have a deeper relationship. The idea is not to displace a traditional bank as a savings account product. So for example, if you hear any neobank saying that we want to become the primary bank account of today's customer, I think that's stretching it a bit, because almost every Indian family today already has one savings account with one of the existing banks, right? All of us do. And India does not have shortage of bank accounts as such. So our objective as a neobank, and as we've just launched our savings product as well, the idea is not to replace a traditional savings account of the family and say, now, thou shalt only bank through me. That's not going to happen, because you think about multiple emotions, right? There are different family members, different generations, different risk appetite, different love for traditional brands. So what we are trying to do is, and trust, absolutely, right? So why would somebody trust a new age company versus a company that they've seen for 5 decades and they have a branch right next to their home? So our objective is to earn the customer's trust by offering one product which delivers value, and then service them with something more, and then a layer on top of it. So we started with credit. We have a few credit products in our credit business. Then we've also launched something which helps customers on the pay later side for small ticket sizes purchases. And we just launched a savings product as well. And we have a whole bunch of relationships through other partners where we do cross-sell and upsell of various products. So we have partnership with established gold loan players where our customers can go and avail gold loans. We have partnership with different insurance companies where our customers can go through us because they know us. They can access trustworthy insurance products. There are a bunch of other products in the roadmap as well. I'm not going to bore you with like a very long product roadmap, but the idea is to
No, I know this is interesting. This is interesting. I think it's important to understand, the mind of a founder, right? Because I think the rules of the game have changed. I think the choice of game has changed, right? It's not getting boring, right? I think it's getting interesting at every point that you highlight, right? So I'll let you keep going.
Sure. So I think so think of a financial ladder for a typical middle class Indian. Let's say an individual sitting in let's say Bareilly, or sitting in Jhansi, or sitting in Nagpur, or sitting in Ernakulam, or sitting in Kunnur. These are individuals that today want the best products. They want access to affordable financial services, but all the banks are not queuing up to these tier 2, tier 3 locations and saying, hey, let me offer you the best products and services. Because the banks say, look, I don't know you well enough to be able to offer you the same product as I know another customer sitting in let's say a metro location who already has a salary account with me. So I want to solve the problem of these customers and put them on a financial ladder. So today, let's say they start by opening a basic savings account with us, or they get a basic credit product. Over a period of time, it could be 2 months, 3 months, 4 months, understanding how they are transacting. We then offer them the next product, which is suitable for them, which increases our exposure to that customer, but it also gives the customer additional value. And then we put this customer on a journey. And we have seen this evolution in the past few years, where we have seen what it takes to retain a customer by offering them value so that they don't go away from us. And then seeing how we monetize these customers. So having a product strategy wherein customers come to you and they stay with you, not because you are throwing TV ads and giving them cashbacks and sending them funky gifts, because that is not sustainable. You don't build a sustainable business by buying customer trust and buying customer loyalty. You build a business by getting customers to intuitively fall in love with what you do. Absolutely. And to customers to think of you as a product that is crucial to their day-to-day lives. That's what we want to be. So the brand that customers understand is solving a real problem is here to stay, not by throwing money at them, but by actually offering products that they love and they can't do without. So put such products out there that creates growth, which is driven by product. It is not driven by buying customer trust or loyalty because you have money to throw. And along the way, as a business, you do right by your employees and your shareholders by creating a monetization strategy, so that there is clear line of sight to creating a sustainable, resilient business.
Some very interesting points, Kunal.
Yeah, so that because in the future, you cannot as a company live on the kindness of strangers. You have to have a business model. Yeah, you have to have a business model where the fundamental, I would say the capitalist angle of creating a business, which is to generate value for shareholders, has to be met, which means your shareholders must see real value when they come and partner with you or they own your shares. That's how we think about it.
So Kunal, I think some very interesting points, right? And I think I would actually love to, the longer perspective that you gave, right, which is so much more relevant. I think it just talks about the ethos and the value system with which you are sort of building this and focusing on this, right, and sustainably, more importantly, right. Now, two pieces that I want to sort of want to question on, right. One is of course a tier 2, and I'm going to come to that question in just a bit. But before I do that, I want to talk to you about so I very clearly sense that there is a larger distribution aspiration, right, and I think that's true for any banking institution, especially when you have an insight on somebody's financial
needs, let's say,
need aspects, consumption trends. It just becomes a natural play that you can extend multiple other services, right? Now, for a neobank, right, or for any intermediary in the process, the biggest of all problems is that all of this is very, very low margin business, right? My worry is that, like I said, right, there's a lot of money which has been poured into the entire lending ecosystem, right? And I see a large part of these lending players now shifting into becoming neobanking players, right? The aspiration continues to be very similar to what you kind of mentioned, right? Value system could be different. Engagement methodology could be different, right? My sense is typically when there are just too many players in the fray, what you're saying, right? Those pieces which entice a customer to create a very wrong perception just become a natural, inherent part of the communication process, right? Or the engagement process, right? The way you want to put it, right? Now, you're talking about a journey, right? Where you want to graduate a customer from point A to point B over a period of time, right? Do you think you're opening your consumer for other players to infringe on this relationship that you've built? of sorts. Don't you think that's too fragile right now? Because we are in a very dynamic ecosystem of sorts, right? Especially in the last 2 years, the speed with which consumers are now engaging is phenomenal. The inhibition is gone, right?
Yeah.
They know that there's nothing at stake, right? They want to be pampered, right? And some of these brands, possibly you're choosing not to go down that route because you're working on a thin margin business. There are others who are backed by capital, and there are quite a few. We've seen capital flows, in the neo-banking space from all the quarters, right? You want to see this pampering, right? Which could just change the nuances of the game, right? The way you want to, for example, become sustainable, it could just change that, right? Love to hear your thoughts on this entire dynamism, fluidity of the situation, if I can put it that way, right? I'd love to hear your thoughts on that.
Sure. So see, Ashu, I think as far as the margins go, if you build a good, responsible business, the margins on the credit side are not thin. They are very lucrative. But if you're building a very superficial product wherein you don't control pricing or the brand or the product per se, then your margins become thin over a period of time. So,
or you have large book aspirations.
So large book aspirations, or actually building a very large credit business through co-lending, through your own NBFC model, different formats, right? Those are mechanics of how you deliver the product.
Sure.
But fundamentally, if you're building a responsible credit business where your cost of acquisition is low, if your credit costs are super low, if your collection efficiencies are very high, and if you have a product with mass appeal, then you are sitting on very lucrative margins. I mean, we have very good margins in pockets of our business because of the fact that we have been able to beat our own operational costs down and become very efficient over a period of time. But not all products and lines of businesses in financial services have high margins. A lot of them have thin margins. So we've made sure, like I said, as a company, because of our credit business, which have been around for a while, we have seen a few cycles, we've actually made the business quite robust. Build enough margin of safety to absorb market volatilities, to absorb shocks, because your pricing and your risk-adjusted returns make a lot of sense. To get this right is not easy. So most players that you will speak to might tell you that the margins are thin because it takes a lot of discipline and a lot of hard work to get the risk-adjusted returns right, which then leads to high margins. Choice of markets, right? Which then leads to high margins. So there is a clear path to getting to sustainable high margin business, but it is complex, it is difficult, it is painful. So you have to pick your pain. You have to pick your pain either ways.
I like the way you put it.
Yeah, I mean, when you're building a company for the long term, there is always, as an entrepreneur, I can tell you that there is always pain and misery, but you'd rather pick your pain and misery while building a business with high margin sustainable than deal with pain and misery without those elements. So we've been very clear. So I think our margins make a lot of sense for us. But to your other point, which is a lot of capital flowing in, customers getting pampered, absolutely. Is there hyper competition in different products? Absolutely. But what is happening is that it's great for the customer, but the customers are becoming smarter. The popular narrative that the only thing that customers care about is just freebies is fast changing. Customers are, that's become commodity. They're not really going after freebies alone because they've realized that this is something that they can get from everywhere. But at the end of the day, the freebie only serves a part of the problem, which is to, hey, it's like gravy on top of it. But if fundamentally my problems are not getting solved, then I don't know what I'll do. So for instance, it's like e-commerce shopping, right? Suppose you go to an Amazon or a Flipkart or an equivalent e-commerce site. And if you want to buy a product, if they give you a lousy product, but they give you a good cashback, how often are you going to keep going? You don't get a piece of apparel that fits you. You don't get a product, the gadget that works. How long and far will a cashback sustain? Because ultimately the product matters. So the cashback and the freebie are gravy. They are not the real purpose. So is there hyper competition in particular pockets? There are. Not everybody is trying to become a neobank because it's quite tough to actually get all the pieces right. I mean, people are not able to get one line of business right, let alone multiple, doing it together. Right. And then you have to solve for distribution. For instance, the way we did it is by absolutely not throwing money at the customer. Like if you see about 18 months ago, we had distribution in about 75 cities in the country. Today, we are present in 16,000 pin codes, which is 85% of India's pin codes. And our products are used in well over 1,000 cities. I think it's now coming closer to 1,200 cities.
Right.
And this is without putting up TV ads, right? And without spending a lot of money on giving freebies.
Right.
The reason it has happened, and we are growing at a phenomenal pace, while the business is also having a clear line of sight to making money and turning profitable. Right. The reason why it has happened is because you need to solve the tough problems first, which is you need to create products that customers want, not because you give them freebies, but because it really changes their day-to-day life. And right. At the same time, it economically makes sense for you. So we've got the distribution right because we have a product that the customers want, and it's growing at double digits pace month on month and quarter. And right. Now on top of this, once the customers understand us because of our product, they have trust in us, they have faith in us, we can now power charge this growth by actually putting our brand out there more proactively, which we have not spent a lot of money on in the past. So competitive, yes. Ultimately, the customer wins because they will choose the product that they want to stick with.
Right.
But not everybody will be able to survive this, because if you're only spending a lot of money on buying customer loyalty and freebies, it's a race to the bottom. Mm-hmm. So that you don't want to run that race ever. If you're playing the long game, that's the race to avoid.
Right. Interesting. I think maturity clearly is playing out in this case, Kunal. I like some of this, right? I like some of this, the sensitivity which you are kind of approaching this entire space and problem, right? Because this is a difficult business, right? And I kind of agree with you, right? You cannot buy in loyalty. It's a temporary transactional play, right? Which just gets augmented for a certain bit. Eventually, it will dry up, right? I think consistency of product experience just becomes so much more important. Kunal, one critical thing, right? Picking up from the point that you highlighted in the earlier point that you made, right? The answer that you put out. You're doing 1,200 pin codes, right? Now that's very, very interesting.
1,200 cities, yeah.
1,200 cities, right? Now, when I look at India, right? India is a massively complex market, right? Yes. As soon as you look beyond the urban markets, you look at tier 2, tier 3, and down below. It's just, it's a massive trust deficit, right? That kind of exists.
Yes,
these are still areas that are grappling with a lot of traditional issues that we continue to talk of, right? Which fintech claim to sort of disrupt, change. Banking continue to sort of talk of, cracking through some of those, traditional ways. Say, for example, lending used to happen, or in general, people used to transact, right? All of that. What's been the experience there, right? To me, that's a very difficult path, right? Because tier 2 is something, or tier 3 is something which needs that touch and feel, right? Which have those behavioral issues. What's really worked for you? I'd love to understand that, right? And this could possibly be, a lot of learning for many others, who are trying to crack tier 2, tier 3. Because there is, I have spoken with so many founders, right? The tier 2, tier 3 is easier said than done, right? The complexity is just so much more higher. Regional nuances are there, cultural baggages.
Yes, absolutely.
How have you been able to crack it?
Sure. I think the experience has been exhilarating, Ashu. And I definitely have more gray hair than I had before I tapped into those markets. So that I can say for sure as an entrepreneur. But jokes aside, it's been mind-boggling how much learning we've had when we reached out to customers. A lot of preconceived notions that we have been shattered, and a lot of things that we took for granted came back and blew up in our faces. And partly because we underestimated the complexity in the early days, and partly because we overestimated our capabilities when we first decided to go into a new market. Now I think we are. Yeah, I mean, we are wiser, but hindsight is always 20/20.
Right.
I can tell you that it's easy for me to say that we had it figured out, but no, we did not have it figured out.
Right.
It was a lot of controlled experimentation, trial by error, putting some guardrails in place and trying to experiment within that. But generics aside, very specifically talking, there have been few strong learnings. One is that you absolutely cannot put out a product without understanding what the customer typically does,
Right.
who that customer is, what language, what's their day-to-day like, what they don't like, because it's massively different. A customer sitting in, let's say, Bangalore, in Koramangala or Whitefield, customer sitting in BKC in Mumbai, or sitting in, let's say, Gurgaon, is very different from a customer sitting in a remote pin code in a tier 2 city. They watch the same channels on TV. They consume the same content on OTT platforms. They have maybe similar smartphones and Reliance Jio and different data connections. But beyond that, the similarity just stops. Customers' needs are very different. So we had to first learn what these customers really want and how are they different. So, for example, the confidence with which you can give a credit to a customer in a tier 1 location in an urban city, the confidence with which you can give the customer, let's say, a 50,000 rupee credit is absolutely different from the confidence with which you can give a customer the same credit is sitting in a tier 3 city, because it comes down to your ability to collect, to understand regional nuances, cultural influences. So so we started by doing some controlled experimentation. We were first in about 75 locations. Then we actually, within those 75 locations, we launched a new product and got some early feedback in terms of how customers were using those. We spent time talking to those customers, really observing their behavior with a microscope, looking at data, going back and forth. Then beyond that, we got a little more, I would say, bold. We looked at the next 100 cities and towns, and with very careful apprehensions in place, we decided to do some control experimentation. We were always a little careful, and I must admit I was a little anxious at times, because I just hate losing money. So I did not want to be in a position where as a business we lose money because of carelessness. So fortunately, I'm blessed with having a great team. So and who are like way smarter than I am in a lot of decision making. So they were able to execute in a controlled manner because of their expertise. All of them come with years. Once we did that first set, then we went ahead and opened up to a larger market. And even when we did that, a lot of times we had to eat humble pie, because we went through scenarios of fraud, which we had not anticipated. We went through scenarios, customer backlash, because earlier days the product was not catering in some fundamental simplicity, and we thought sophistication would work, so on and so forth. But essentially, through 3 to 4 layers of iterative working and almost like 6 to 12 months of learning, have we then been able to strike a balance where we exactly know what we are doing. And if you ask me, like, hey, what's happening in this particular city, in the country, in your product, I can now tell you with confidence what's working and what's not working. Earlier, we did not know that.
Super. Well, how I want these conversations to keep going, right? I think there's just so much more learning to sort of do, right? And have, unfortunately, good things have come to an end, and I think I would want to bring this session to a close, and possibly save some questions, right, for our next conversation when we do, and hopefully soon, right? But my second last question in this conversation: what are the next 2 years like, right? You're in an exciting phase. New banking is something which is picking up. This customer responsiveness, right? While and I think 2020 has been a revelation of sorts, right? I think content, like I said, the exposure that content has brought in, right? I think that's just killed the inhibition that the Indian ecosystem had. While there are still, issues when it comes to, say, basic banking, right? Moving from, the ICICI of the world and, a bunch of others to a neobank. I think that is still something which will take a little more effort and time. But I think we're possibly in the best phase as far as that is concerned, right? I think just couple more months. And I think that just the confidence just picks up, right? Is my sense. So I think from a groundwork standpoint, I think it's just there. Would love to understand what are the milestones that you've set for yourself, or what is it that you're chasing in the next 2 years?
Sure. I think a lot of our milestones are driven by what we can do for our customers. That is the prime benchmark of success as a business for us, and everything else follows. So we crossed 1 million transacting customers across our product. Now these are not just customers who come to us and just sitting over there. These are actual customers transacting across our products. The next immediate milestone is to get to 2 million customers, and then expand and get to about 5 million customers. And that's one. Second is, we are already contribution margin positive as a company, which means our net revenue that we earn today on a monthly basis covers all our variable costs, including our credit costs.
Interesting.
We have a line of sight to getting to profitability. My desire would be to become one of the first few consumer neobanks that turn profitable. I think we can get there. The team is like super focused. We have a clear line of sight. We have products that work, margins that work. The discipline is there. So that's probably the next milestone. I think along the way, we definitely want to be a destination where people come and work with us and they are convinced that we are building products that are changing customers' life. I really believe that it's important for people to believe in this. So if we can attract talent that comes and is as excited as I am, to actually put products which are changing their families' lives, their friends' lives, and actual lives, that to me is like one big benchmark. And then, there are other things which will happen along the way, in terms of attracting the right, media attention, fundraising. Not too worried about all of that. That always follows. When you do it right, everything follows. So I think these milestones are what I'm really obsessed about.
Super. Well, every journey is unique, right? It's very cliched, but I think important. I like to do this towards the end of our conversation, right? And is to register any suggestion, advice that a founder has for many others in the community, right? Stakeholders at large, right? If you were to give out one, what would that be? I'll leave the choice in terms of how you prioritize, right? But I would let you. I would love to sort of capture that as a parting comment.
Sure. I would share an insight which is a reflection of how I think. And it may not be suitable for everybody, but this is how I think. I think you have to think long term. That's the only way to build something which is sustainable, which outlasts you. And I think I want this company to be something which as a brand and a product exists well beyond my energy levels. So I would say thinking long is super important, which means always think about creating genuine value for customers through your products. Not by trying to buying their loyalty, not by trying to confuse them with mixed messages, by misleading them, but by actually offering products that create genuine value that's going to change their people's lives. That's number one. That's number two. I would say first is think long. Second is create products which ultimately change customers' lives and they fall in love with you. And the third is definitely obsess about creating shareholder value, which is that you need to create a business which is sustainable, which is resilient, and which can create shareholder value and wealth along the way for everybody who's believed in you. So, and you have to do that in an honest way, not by taking shortcuts. So it is painful, but hey, there's always pain in life. You might as well pick the right path, because
and
even
choose
the wrong
right
path,
pain.
there's going to be pain. Yeah, I mean, choose the right kind of pain. There's going to be pain irrespective,
Right.
So that's what I would say, Ashu. Yeah.
Super. Kunal, what an interesting session. Like I said, right? I don't want these sessions to kind of end, right? Something at the start of the conversation, right? You mentioned that possibly age is something that comes through, right, as we talk. No, but I think with the maturity that is required, Kunal, to cut for a market like India, I think through this course of conversation, I think that's been a constant, right? Every single piece that you put out, right? I in my mind have been thinking. I mean, I know banking very, very closely. I've been a banker. At the start of my career, right? I know a lot of this is very, very difficult, right? You're working in an extremely competitive market. You're working in a very highly regulated sort of environment where, the regulators are not necessarily clear, right? They also are getting a grip on things, right? Which essentially means that, your direction could possibly change overnight, right? We're seeing a lot of those struggles, be it lending, be it banking operations, be it wealth tech. It's extremely complex, right? And I think at the same time, to be ensuring that your product is cut right, to preserve the trust of the consumer, who's eventually, who eventually has to be comfortable. I think just so much more important, right? I think you need to be so delicate and so balanced at the same time to ensuring that trust doesn't go away, right? Because you do it one wrong, and I think that's going to just percolate into many others, and your cost of acquisitions and that cost of creating trust is so much more higher. Kunal, it's been an absolutely spectacular conversation. Thank you so much for doing this. And I look forward to doing many more in the coming times. There are a lot of things that need to be discussed, right? I think this was a more macro conversation. I'd look forward to doing more micros But thank you so much for doing this and taking the time out. It was a pleasure.
Pleasure, Ashu. Thanks a lot. As always, lovely to chat with you. Your energy levels are contagious. Thanks a lot for making this conversation so interesting. I loved it. Thanks a lot for having me. My
Thank you for the
privilege.
compliment. Thank you. Thank you, Kunal.
Thanks. Bye.